Welcome back to Investing Talk podcast. We're launching into a focused exploration of recent developments around a company called Kazia Therapeutics.
That's right. We've been looking at a whole stack of recent info, company announcements, market reports, financials, to really try to bring you the essential picture of what's been happening with Kazia. We'll get into some pretty intriguing news from their cancer research, how the market took it, and, well, what their financial situation looks like.
Yeah, our goal today is basically to cut through all that noise, pull out the key bits, so you can get a handle on things quickly without reading everything yourself.
Absolutely. And before we really jump in, if you find these deep dives useful, maybe take a second to subscribe, like the episode, or even drop a comment with your thoughts or questions. It honestly helps us a lot.
It really does. And, if you're feeling generous, consider buying us a coffee. It helps support putting these together.
Okay, much appreciated. So where should we start?
Let's dive right into the big news first. That announcement on June 11th, 2025. Kazia put out some preclinical data on their main drug candidate, paxlovid, and it seemed to get people talking.
It definitely did. And what the data suggested is why it stood out. It showed potential for treating triple-negative breast cancer, TNBC.
TNBC. I know that one's got a tough reputation.
Exactly. It's known for being particularly aggressive, harder to treat, fewer targeted options compared to other types. So any potential progress there is, a pretty big deal in oncology research. Makes people pay attention.
And the research itself came from a credible source.
Seems so. It was led by Professor Sudha Rao at QIMR Berkhofer Medical Research Institute. That's a respected institution, so it adds weight to the findings.
Okay, so potentially significant preclinical data for a tough cancer. That alone is noteworthy. But wasn't there something else just before that? More clinical news?
There was. Good memory. Just about 6 days earlier, June 5th, they announced something different. The first patient had been dosed in a new Phase 1b trial, also involving paxlovid.
Okay, Phase 1b. For listeners maybe not deep in the pharma world, what does that really mean? What's the focus there?
Good question. So clinical trials have stages, right? Phase 1 is usually safety, dosage, small group. Phase 2 starts looking at does it work in more people. Phase 3 is the big one, comparing it to standard care. But Phase 1b, well, it's still early stage, focused on safety, but often they're starting to look at efficacy signals too. And crucially, in this case, they're looking at how paxlovid works in combination with other treatments.
Combinations, right?
Yes, specifically for advanced breast cancer, combining it with established immunotherapies and standard treatments. It shows they're thinking ahead, about how this drug might actually fit into how doctors treat patients down the line, assuming it works out.
Which is obviously critical for actually getting used.
Absolutely.
So you've got this positive preclinical news, progress in a new trial. Naturally, the market's going to react. What actually happened with the stock price after that June 11th TNBC news hit?
Well, the reaction was pretty immediate and quite dramatic. Based on the reports we saw, the shares just took off. They soared over 79% just on that one day, June 11th. Closed around $9.41, I think.
Wow, 79% in a day.
Yeah, put them right up there among the biggest movers. And the trading volume, the number of shares changing hands, it just exploded. Huge spike. Clearly caught investor attention.
What about the professional analysts? Did they weigh in on this? Did it change their views?
It seems the overall sentiment from analysts stayed pretty positive, maybe even got reinforced. Maxim Group, for instance, reiterated their buy rating and a $15 price target on June 11th, the day of the jump.
Okay, so they stuck with it even after the price spike.
That's what it looked like.
Yeah.
And if you look at the broader consensus reported in some analyses, the average one-year target was somewhere around $56.10. Now, there's a huge range in those targets. The high estimate mentioned was way up at $96.96. The low was down to $15.23, which is right around that Maxim target.
So even the low end implied more upside after that big rally.
Interesting. According to those analysts, yes. It suggests they see significant potential still, assuming things go well.
And how does this compare to, say, the chatter online? Reddit, X, that kind of thing.
Oh, the online mood definitely shifted sharply positive, mirroring the stock move. Lots of talk about it trending, new eyes on the stock. And the inevitable speculation started popping up about potential buyouts, fueled by the data. Though, important to stress, that looked like pure speculation, rumors.
Right, gotta be careful with buyout rumors.
Definitely. And you did see some of that caution online, too. People pointing out the huge gain, the volatility you expect with these stocks.
Yeah.
Basically saying, hey, verify stuff, be careful jumping in after a near 80% pop.
Yeah.
So excitement, yes, but also a bit of let's be realistic about the volatility.
Okay, that gives us a good feel for the recent news and the market's immediate take. But let's pull back and look underneath the financials. How do we even think about Kazia's finances when they're in this R&D phase, announcing data, not selling products yet?
That's really the key question for understanding companies like this, these early-stage biotechs. Kazia fits that profile perfectly.
Hmm.
Their business right now isn't about sales revenue. It's all about investment, pouring money into R&D, right? Preclinical work, running those expensive clinical trials.
Yeah, those trials cost a fortune, I imagine.
Exactly. So when you look at their numbers, the sources point to basically minimal revenue, near zero forecasted for the near term, very little in the past. And because they're spending so much on R&D, you consistently see negative earnings per share, negative EPS.
Meaning they're losing money per share, not making it.
Correct. And their overall net income, the bottom line, is negative too. The reports mentioned a loss over $17 million in the last 12 months they reported on. This also means things like free cash flow are negative. They're spending more cash than they're generating from operations, and return on equity is negative.
So the story is, spend money now, hope to make money way later if a drug gets approved.
That's pretty much the model. They're investing heavily today for potential future payoff, and that's why metrics like the PE ratio, price to earnings, are basically meaningless here. You can't really calculate a useful PE when there are no earnings or they're negative.
Right, divides by zero or negative. Doesn't work.
Exactly. Now, about debt.
Hmm.
The recent reports we looked at didn't flag high debt levels, but that's something you'd always want to check in their latest official filing.
Always check the filings. Good point.
What was clear is the need for funding. They did raise $3 million in Q1 2025. And interestingly, $1 million of that was called non-dilutive.
Okay, non-dilutive. What does that mean for investors?
It means they got that $1 million without issuing new shares of stock. See, when companies sell new shares, it increases the total number out there, which can dilute existing shareholders' ownership percentage. Non-dilutive funding avoids that.
How do they get that? Grants. Selling something.
There'd be grants, certain loans, maybe milestone payments from partners, or selling assets or IP. Actually, Kazia did sell some IP earlier in the year, remember, for Cantrixil.
Ah, right. So that $1 million was good news in that sense.
Yes, less dilution is generally preferred by existing shareholders. But even with that $3 million total raised, the analyses pointed out that their cash runway, how long Longami lasts, is still pretty limited. Those clinical trials just keep consuming cash. So this highlights their ongoing reliance on finding more money, which brings back that risk of potential future dilution down the road unless they strike a big partnership deal or something.
Okay, let's shift back to the science then. What exactly are they developing? What's the core technology they're banking on?
Right, so their main focus is oncology drug development, targeted therapies for cancer. The lead drug, the one making headlines, is paxlovid. It's described as a brain-penetrant PI3K inhibitor.
Okay, let's unpack that. PI3K inhibitor and brain penetrant. What's the significance?
Sure. So PI3K is an enzyme pathway in cells. It's involved in growth, survival, stuff like that. In many cancers, this pathway goes into overdrive, helping tumors grow. A PI3K inhibitor is a drug designed to block that pathway, hoping to slow or stop the cancer.
Makes sense. And brain penetrant.
That's maybe the key part for paxlovid. The blood-brain barrier is like a protective shield around the brain. It's great for keeping bad stuff out, but it also blocks many drugs. So treating brain tumors like glioblastoma or GBM, which is a major target for paxlovid, is really hard because many drugs just can't get there effectively.
Ah, so paxlovid can cross that barrier.
That's the claim, yes.
Yeah.
Its ability to penetrate the brain is a key differentiating feature.
Yeah.
So they're developing it for GBM, certain pediatric brain cancers, other solid tumors, and now exploring breast cancer, including TNBC, as we discussed. They also have another drug candidate, EVT-801, earlier stage, different mechanism, also for solid tumors.
And that Cantrixil sale you mentioned.
Yeah, selling the IP for that for $1 million back in March was framed as part of a strategy shift, basically letting them focus resources more tightly on paxlovid and EVT-801. Makes sense when cash is limited.
Okay, so focused pipeline, brain penetrant lead drug. What gives them an edge in such a competitive field like oncology?
Well, their main edge really comes down to the intellectual property around these specific drug candidates, paxlovid in particular, and the potential, still potential at this stage, to be a first or best treatment for specific patient groups, especially where getting into the brain is critical. They're acting as an innovator, a challenger. They don't have approved products, no real market share yet.
So they're not competing head-to-head on sales with Big Pharma yet?
Not really. Their competition is more about proving their science is better or fills an unmet need, compared to, say, Novocure with their GBM device, or a big player like Denali focused on CNS diseases more broadly. Kazia is competing on the specific potential of its molecule, Paxilosibs, and its unique properties like crossing the blood-brain barrier.
That barrier penetration seems key.
It really does differentiate it from a lot of systemic therapies. And the broader context helps too, right? Cancer rates are unfortunately rising, but advances in precision medicine are also booming, which creates opportunities for targeted drugs like Kazia is aiming to develop.
Okay, let's try and weave this together. We've got exciting science, especially that recent preclinical data, a new trial starting. The market clearly got excited, judging by the stock reaction. But then there's the financial reality, burning cash, needing more funding, the classic early-stage biotech situation. It feels like walking a tightrope.
That's a very good way to put it. It's absolutely the high-risk, high-reward profile you see so often in this space. Looking at the opportunities, that positive TNBC data definitely boosts Paxilosib's profile, its credibility. And if these ongoing trials, the breast cancer one, the upcoming big GBM trial, if they deliver strong results, that could unlock huge value, could lead to faster regulatory pathways, maybe attract partnerships, licensing deals from bigger companies.
Yeah.
That's the upside scenario.
Right, the blue sky. But the risks.
The risks are just as significant and maybe more immediate. The biggest one, common to all biotechs, is clinical failure. Promising early data, whether preclinical or phase 1, just doesn't always hold up in larger, later-stage trials. Or maybe regulators want more data that's always hanging over them.
The valley of death for drug development.
Kind of, yeah. And then there's that constant need for funding we keep coming back to. Running these trials is incredibly expensive. So they likely need more cash, which probably means selling more stock, diluting existing shareholders, unless a big partnership materializes.
Competition too, right? Others are working on cancer drugs?
Always. Big pharma, other biotechs, they're all racing to find better treatments, including combination therapies. Kazia needs to show its drug offers a real advantage. And, even getting alignment with the FDA on the design of that big GBM trial, which they apparently have, and that's good, provides clarity. It doesn't guarantee success in the trial. They still have to run it effectively. And the drug still has to actually work well enough and be safe enough. Lots of hurdles still.
So looking forward then, what are the key things investors or anyone interested should really be watching for? What are the next potential big events, the catalysts?
There are definitely some key milestones to keep an eye on. A really big one is getting that pivotal phase 3 study for glioblastoma finalized and actually started. Updates on its progress will be critical.
That feels like the main event for Paxilosib's original target.
It really is.
Yeah.
Then you'll want to watch for data readouts from these other ongoing studies, the breast cancer one we talked about, and the ones looking at Paxilosib combined with immunotherapies. Positive results there could open up entirely new possibilities.
And partnerships.
That's the other big potential catalyst. Any significant licensing deal or partnership for Paxilosib or even for EVT-801 could be a game changer. It would bring in cash, validate the technology, huge potential impact.
And the risks, I guess, are just the opposite happening, those catalysts not panning out.
Pretty much. The main risks are tied directly to those events. If a key trial fails or gets significantly delayed, that could hit the valuation hard, especially since so much rests on just a couple of main assets right now. And that funding need isn't going away. If they don't land a partnership or hit milestones that bring in cash, they'll almost certainly need to raise more money, likely through selling stock, which means...
Potential dilution again.
Exactly. It's the constant balancing act.
Okay, let's wrap this up. If we had to boil down everything we've discussed, the exciting science, the market reaction, the tricky financials, the pipeline potential, the risks, the upcoming milestones, what's the core message? What's the distilled view here?
I think the core takeaway is that Kazia Therapeutics really embodies that classic high-risk, possibly high-reward, pre-revenue biotech story. Its value, today and going forward, seems overwhelmingly dependent on whether its clinical trials succeed over the next few years. That's the bet. The recent preclinical news was definitely encouraging, adds to the potential, but the financial runway, the cash situation, remains a constraint, underlining that need for future funding or partnerships. One analysis we saw summed it up with a hold rating, basically trying to balance that promising, differentiated pipeline, especially Paxilosib's brain penetration, against the very real financial pressures and the inherent risk of clinical development failing. It's a story driven by hope in the science, tempered by the tough economics of drug development.
So, thinking about all that, the potential medical advance for something like TMBC, the market's sharp reaction, the financial tightrope they're walking, the make or break trials ahead. What aspect of this whole journey for Kazia do you find most compelling or maybe most concerning as you look at it now? Something for our listeners to chew on.
That's a great question to leave people with. For anyone following companies like this, really digging into the science, understanding the trial phases, and grasping the unique financial model of these early biotechs is just so critical. It helps you assess both the potential and the risks more clearly. And of course, there's always more detail in the company's own reports and filings if you want to go even deeper.
Absolutely. Well, thanks for joining us for this deep dive.